Well, everybody, I've got someone you may have seen once or twice or 3 or 4 times now on the old Realist News show, Lior Gantz. He it's funny. I say this so many times because I'll have people asking me, "Hey, get that guy Leo back on your show, on Lior back on your show," and I'm like, typing back, you may not have known this, but I've got a schedule with him in about 3 days, to have him on. So it's funny, no one says a word. And then the day comes when we're talking, like, hey, let's do a little chat. I get emails coming. What's, are these people spying on us or what? So it's kind of funny.
I
So,
pay them.
yeah, that's what it is. I knew it was something. So what's going on? What's been going on with you lately?
Well, it's all good. Akuna Matata. Had a beautiful 2017, and can't wait to rock this year. It's been a great change of pace from 2017 to 2018. We're really seeing so much differences in terms of the economy, how people are trading and investing, and obviously we live in very interesting times. So I can't wait to answer whatever questions that you or your audience has.
Yeah, so you're a bit into cryptos, correct?
Sure.
Yeah, oh yeah, okay. Um, so recently, we've had a bit of a smash, to say the least. It might have been one of the worst crashes ever in crypto. A lot of people got
Hmm.
nervous. I was kind of trying to rally the troops, guys. We've seen this, seven, whatever, multiple times last year. Yeah, sure, it wasn't this bad, but then
Yeah.
people were sending me charts and things like, hey, look, every January, matter of fact, right around the 15th, plus or minus about a couple days,
Okay.
some of the worst sell-offs have happened, at least with Bitcoin, and then a recovery went on to happen. And you look at the charts, they all look not quite identical, but pretty close to it. So I'm like, all right, well, that's a good sign. There should be a recovery, and we've seen a nice
Yeah.
recovery since then. So what do you think? Is there, should people be reacting a certain way when they see this? Should they hold? Should they be buying more? What does old Leo do?
Well, I'll tell you this. We've had a great fortune in 2017 to cover Bitcoin at 400 at Wealth Research Group. We covered Ethereum very early, $12. One of our biggest picks. Dash at $30, Monero 19, Steam at about 20 cents. In December, we did Ripple at 27 cents, and about 2 hours after we published our research, it started flying to $3. It was a pure coincidence, obviously, because the Asian subsidiaries banks agreed to take it on, and then it got involved in the terminal for Bloomberg. So everything happened at once. We just saw so much pent up energy going forward for that crypto. So we covered it, and then just recently we published our top five cryptos for 2018 at wealthresearchgroup.com/top and the number five, top five. But we only featured four in there because the fifth one we're going to release this Thursday. So the 25th or 6th, whatever is this
25th.
Thursday.
Yep.
25th, our top one for 2018. And so yeah, look, I got involved in cryptocurrencies very luckily. I was skiing in Aspen in 2013 and overheard some people at the lobby talking about digital gold, and just approached three guys on a laptop, and they explained it to me in exchange for a couple of beers that I bought them for a few hours. Best negotiation of my life. And look, in my opinion, and this is what I told RTTV, Russia Today, last week when they asked me about the smash in cryptocurrencies. The way we see it at Wealth Research Group, the word cryptocurrencies is not even relevant anymore. It's not the right word. None of these projects, there are over 1,400 projects out there right now, are not. None of them are currencies at the moment. Only a small few, Joe, are even aspiring to become currencies. Some of them are aspiring to be privacy coins. Some of them are aspiring to be other types of currencies. You got Bitcoin, obviously, Litecoin, Dash, Monero's in there, Zcoin, Zcash, etc. But for the lion's share of them, they are. You need to think of them as startup businesses, very early stage, in a new environment for capital markets. So they're not, they don't go and raise money in the usual way, in the traditional corporate way. They go and do it based on a blockchain platform or other similar platforms to blockchain. And therefore, when you own a piece of it or you use a coin and you own it, you own a piece of the future possible growth, potential growth of that development team, of that management team, etc. If it ever becomes more adopted and more popular. And right now, what we're going to see is we're going to see a lot of new coins coming out in 2018 that are not going to be based solely on trading. So if an exchange shuts down, that it's not going to be the end of your adventure, because that coin will be able to pay a dividend no matter what's going on in any particular exchange, or it will be able to generate money outside of trading. So that's something that's coming, and this entire space, digital asset space, based on the blockchain, is going to become much, much more sophisticated and offer many more opportunities in 2018, but only if you understand that they are very speculative and you should view them as tech startups. So like the NASDAQ bubble, many of these companies will not last. Why won't they last? Poor management, poor developers, loss of enthusiasm by investors and users, outcompeted by other cryptocurrencies, merged into one company, like a few ideas merge into one, etc. You are going to see some of them that will be around 10 to 20 years from now if they are able to solve real world problems. That's the end. At the end of the day, that is what is important. But in the meantime, sure, so much money is coming into this space that you're going to see people making foolish moves and make a lot of money, and people make smart moves and not make a lot of money. It just happens in a speculative era or in a speculative period. That is something that happens. You can see 250,000 people opening an exchange account in one day. That's insane to me.
Oh, on Binance. They had to shut it back down.
Well, Binance and Bittrex and
all of them, really, yeah.
Yeah, all of them are and it takes a month to get them to get back to you on if you file a ticket, etc. It's a very hectic ecosystem right now, but there are some projects that are insanely good, in my opinion, and have so much potential going forward that it's worth backing them up and staying the course. And of course, if you talk about these wild swings, remember, for most of these projects, if you want to sell them, you need to move to Bitcoin, and then you need to move to fiat. So that's why when some of these smash, they all tend to smash together. And that's indicative of an early stage opportunity where every news event, like, hey, China's going to clamor down on some exchanges, it rocks the boat, it rattles the entire cage. Obviously, these developers still got up in the morning, still went to the office, still are looking to make token holders or coin holders a lot of money by advancing the projects, and nothing has changed. If you call all of these management teams at once and say, hey, why is the coin down 30%? They don't know. Nothing has changed
and a lot of
for
them
them.
Don't care. A lot of them don't care because they don't care about the price. This was never about the price for these people. They want to take this new technology, do something incredible with it, move forward. I talked to the guy from Pillar quite a bit, and I was like, man, look at it, it's 50 cents. It's been up to $1.50 now. And he's like, Joe, I'll be honest with you, I don't really care about the price. We're more concerned about getting our wallet platform out there and open source code out there, and we want to just have a great product that works great and blows people away, and we really don't care about the price. And I'm thinking, yeah, that's true. Of course, the rest of us token holders see it a little bit on the other side, but we want to make some money. But we do like the technology too, so it just proves, hey, this is why we like cryptos. We get to make money. We're holding on, like you said, to this asset. It's kind of like a share of the company.
It is.
And as long as you got a great team and a great vision and a great project, move forward and do what you got to do.
But let me give you something more sophisticated. Okay, so why don't you build two portfolios? This is what I do and what I am going to publish very soon for the Wealth Research Group free financial newsletter, a more sophisticated way of doing this. So you build two portfolios. And you can even make sure that you don't get confused and own both of them on separate exchanges. And then one portfolio is your long-term portfolio. And that portfolio, you don't care about daily movement so much. You only care that you have enough of the projects that you like. And then on your short-term portfolio,
we call that your HODL. Your HODL portfolio.
Exactly.
Okay. For my
Exactly.
people, that's
Okay.
his HODL portfolio. Okay. Continue.
No problem, but just make sure. Huddle means hold, and for if you want to make it even more sophisticated, then increase your positions on days when there is a lot of volatility on the downside and nothing fundamentally happened to your specific project. So if you see a day where everyone's going down, that means that something has threatened the entire industry and not your particular coin. It's obviously a great time if you're underweighted in that particular project to get some more coins.
So
And then
let me ask you real quick. When we had this sell-off in January, were you grabbing with both hands?
I would, yeah. I'll tell you what. Honestly, it was such a beautiful day because you got to really see panic on one side, and you got to really see that there's so much of a community feeling, like you said, from people who say, "Hey, shake it off. It's going to be fine by tomorrow," and therefore, it's very easy and very it less emotionally strainful to do it, because when you see a sell-off in the S&P 500 like you saw in 2008, it's very hard to say, hey, you know what, Intel's not going away, hold on to your shares, don't sell Intel at 50% discount. That's insane. But when you see all of the financial media covering this creates a panic. In cryptocurrencies, you don't see CNN and NBC and everyone else running 24/7 shows on a 50% downturn. Imagine the S&P 500 going down 50% one day. It would be like a second 9/11 on TV. So that calmer feeling and the fact that it's not that big yet is very positive and constructive for your emotions, because you don't get stressed out. Whereas if your exchange would have called you, like your broker would have called you, you probably sell half of it.
Yeah.
Excuse my voice.
That's all right.
So, so in the top 10, my best one for 2018 would have to be EOS. I'm sorry, and so I piled in a lot of coins there, and then obviously I don't want to ruin the surprise, but
EOS. I'm going to spell it out just for my people in case. EOS, guys.
Yeah.
That's a coin we love that I keep telling them. Guys, I got in that sucker at 58, 60 cents. And I said, to hell with it. I told everybody on YouTube, I got to get into this one because next year, when these guys get out with their platform, I think that thing's going to rocket. And look at where the price is today, dude. It's insane.
Yeah.
I'm glad you like it. That's what I'm trying to say.
Well, and you called it right. And this Thursday, the 25th, in the newsletter, it's a free financial newsletter. We're gonna cover our number one for this year, and I believe I don't want to give it away before we do it on the official website, but I believe that you would like it as well. So that's where I'm at with cryptocurrencies. And again, I think the proper name for them would be blockchain-based startup tech companies, and we will see in 2018 more and more regulations. But on the flip side, you're going to see, Joe, companies come in and say, hey, we have just built a platform where you can take your ICO and go through this process and you'll be regulated. We are working with the government. So there are going to be companies that are going to come in and say, hey, we've got this figured out for you. We are the intermediary between you and the government, and you can feel safe, and your token holders or coin holders can feel safe. And these companies or these new projects will be far more safe than those that the governments will want to go after. So that's something that's important going forward. Excuse me.
So I'm sure, based on what you said, I'm sure you agree. The SEC, a lot of times these ICOs were coming out overseas, whatever, even great ones. If you're an American citizen, you can't join, because we just don't want to deal with the SEC yet, blah, blah, blah. Correct me if I'm wrong, but what you're saying is those days are going to be over, and Americans will be able to join at some point when this regulation comes.
Well, look, governments are at a point, if, just think of any regulatory agency in the world. You've got close to $1 trillion already in this space, whether they like it or not, and it's gonna balloon even more. More and more smart people, developers, programmers, people that are the minds of the future are going into this space. Governments don't want to stall this, but they just want to control it as much as they can. It crept up behind them, and now they need to catch up. So what they are looking for is this angel that will come in and say, "Hey, excuse me, I got a solution." So we are going to see companies that will be this just bridging force between regulatory bodies and the the developers.
Great.
Look, in terms of just profitability, the Nasdaq or the S&P 500, they work 9 to 5 or 9 to 4, whatever, and 5 days a week. These things trade 24/7, 7 days a week. It's in the best interest of every financial institution in the world to get these babies moving, because the tax revenue, the employment opportunities, the fees, the commissions, the amount of efficiency that they can create in our world is insane. Just think of when you buy like a second-hand car or a third-hand car or a fourth-hand car. You want to know the entire history of this car, and you want to wrap up the transaction real easy. With the blockchain, that's going to be transparent and possible. And I'm talking about cars, but there are far more important things that you want to know the history of, especially people. You want to hire someone. What's his history? And there are, the world is divided into two. There are 4 million documented and banked people in the world, and there are about 3 billion people that are undocumented and unbanked. Some of them are living on beachfront shacks in beautiful locations in Southeast Asia and South America and in Africa. And let's say for someone like me, I want to buy a retirement villa and own it on a piece of land in Africa, white sands, blue waters. You don't know who owns the deed. There's 100,000 acres. 100 million acres of African land that is undeeded. You don't know who owns it. And and any tyrant and the government can come in at any time and scoop it up. So putting all the deeds on the blockchain will unlock. It's estimated about $10 trillion of wealth to this world.
Yeah, well, like you said, all the stuff that's going to come with it. This is new technology, the business opportunities, the employment opportunities. Like you said, everything. There's a guy that a good friend of mine now, who I met through being a subscriber of mine on YouTube, and he's kind of doing his own thing in Hollywood now. He's starting up a production company. He's already done it. They're going to be shooting some films in the near future. He's actually invited me to be in one in the near future, a little small scene, which is really, really incredible to me. But we start talking about cryptos, and he says, a lot of times they'll have a little fund set aside, called a little pension, if you will, for the crew, for everybody in the whole industry over there in his particular group and the people they work with. But he says, we're going to do that, but he's like, I don't want to do that in the old way. He's like, I'm going to end up hiring somebody at some point to manage our cryptos, because that's what that fund's going to be in. And if we take 5 or 10% of the extra profits to give to all the employees, and it's managed in a crypto fund, that's what we want to do. So I'm like, that's an interesting way. Yeah, you'd be one of the first people to probably do that. So, but this is not just some little store on the corner. This guy's making, this is a production company that I'm talking with. This is great news for cryptos. This is what we want to hear and see. So it's really incredible. Do you see any issues with the stock market? Because I keep hearing, as long as Donald Trump's in there, maybe we'll have a hiccup, but it should be strong. And then you have the other side. There's going to be a big correction coming. Do you see anything? Are you hearing anything?
I'll tell you what. What's really important right now to watch is the Fed funds rate and the 2-year, 5-year, and 10-year Treasury yield, and then the S&P 500 dividend yield. Those three, the Fed funds rate, the yield on the treasuries and the yield of the S&P 500, they are the determining factors in every bull market cycle of when it ends. The Fed fund rate is basically the rate at which short-term lending between banks occur. If that rate is higher than the 2-year and the 5-year bonds, and especially if it gets higher than the 10-year bond, that's it. The market will top. Right now, it has about a 1-year trajectory until it happens. So I'm not seeing a market top in 2018, but the 2-year and the 5-year bonds have become higher, are yielding more than the S&P 500 dividend yield. Now, for the 5 years between 2017 and 2012, what many pension funds have done, because they couldn't get yields from bonds, is they went into the S&P 500 for the dividend yield, because it was much higher than the bonds that the U.S. government issues. Now it's at par. And so what you're going to see is pension funds moving trillions of dollars into the safe treasury yields. I say safe just because the government can issue them without the risk of default, as long as the U.S. has the reserve currency of the world, and that's probably not going to change in the next decade or so. Although it's in rough shape. So in 2018, I do see a correction, just because the first time that the S&P 500 will correct down, you're going to see that all the money that used to buy the dip will not buy the dip this time. It will go into bonds. And so I think we're going to see the S&P 500.
Could it be possible that some of that money goes into cryptos? Because
not yet.
You don't think
not
so?
Yet. No. There's $30 trillion worth of managed institutional money for traditional people. So, call it your CEO type investors, and they can only get into the to the crypto arena through funds that manage their money. But the funds will not open an exchange account like an average person. What they would do is they would look for for blockchain companies in the stock market. For example, I don't know if you know this, but to give you an idea, some companies have launched on the stock market, and they're mining Bitcoin and mining Ethereum. They're pure blockchain miners. An example would be Hive Blockchain Technologies.
Yep.
Started trading in September for 74 cents Canadian, and it rallied all the way up to about $7 in 3 months. It's now trading at about $4 Canadian. I did a thorough research on the company. By the way, if you want to go to wealthresearchgroup.com/must, and then there are going to be more of them coming along in 2018. Companies that produce the equipment for the miners, exchanges that will go public, etc. So this is where the institutional money will go, and obviously they will go into the futures market as well. With regards to a stock market correction, what I think that, will happen is this. Inflation is picking up right now. It's the consumer is feeling much more confident, and obviously he's got more disposable income now with the tax cuts. Corporations have more disposable incomes with the tax cuts. They're gonna want to invest in machinery. They're gonna want to hire more. Hiring more means higher wages. I'm not talking crazy higher, but you are gonna see higher wages until we hit this peak efficiency for the cycle, where the business margins are gonna be as fat as they can be for corporations. And then if you want to stay with fat margins, what do? You lay off people. There's basically no other way to keep your margins high and keep production going. So you are going to see us topple over into a recession, a 6 to 12 months recession, nothing 2008 like, but you are going to see this come in 2020, and it's going to be very close to the next election. So we'll see how the president will intervene in this and what he will want to do. That's why I think he'll want to rush the infrastructure program as fast as he can. Now he has political capital. People like him after the tax cuts. He has the same approval rating as Obama did after year one. So the country is getting more unified. Obviously, the wealth disparity in America is so great right now. It resembles Mexico. So It seems like this. It seems like your right hand is in boiling hot water, your left hand is in ice cold water. So on average, you're feeling great because it's a nice melting water. But the average doesn't matter here in America anymore. If you take a group of 1,000 people, one person is one person is richer than 900 people combined in that
Right.
group.
Yep.
So the wealth disparity is massive, and that's why I think in this environment, commodities will start to head higher just because of infrastructure plans and what's going on in China right now, where they're shutting down a lot of smelters and a lot of mining operations because of grave pollution. I'll tell you what. I have a 15-month-old daughter. I just opened a traditional brokerage account for her, and we're gonna buy her first stock and under her name. And the reason I'm telling you this is because we thought, where should we do it? What should be our first stock? And between 2009 and 2012, most of the investments I've made were in the S&P 500 with a group of companies that I call dividend aristocrats, and they are just companies that are able to raise their dividends year over year consecutively for over 25 years. No matter what the economy is doing, recession and inflation, deflation, whatever the interest rate, these companies have such a competitive advantage, the same competitive advantage that you're looking for when you're looking for a nice crypto project they have in the traditional business world. But these companies are fully priced right now. And so we were looking at what is the one area that did not join the bull market party yet. And that is the commodity sector. Every other sector is expensive. Commodities are right now as cheap as they were in 1942. You've not seen them as cheap in 70-something years. And so what we did is we made an order for Monday, for tomorrow, for a company called Callinex Mines. And the reason is that, just like with cryptocurrencies, Joe, what we wanted is a 2 to 3 year timeline where we know what is going to happen with the company. So to give you an example, I researched this company for months. I obviously know the management team very well, sat down with them a bunch of times, and what they have is a zinc project in Canada, which is about to become economical on the public sense. So they're going to release a PEA, which is a preliminary economic assessment. Once that's public, it's going to show that their project is economical and it can be turned into a mine. No zinc discoveries have been made for 20 years. Yeah. There's 1 week left of stockpiles in the London's Metals Exchange. That's as low as it's been ever. And so if this company can say, hey, we're going to have a mine in 2 to 3 years, there's going to be a major cap company that's going to want to take them over potentially, and the price that they're willing to take is about 5 to 7 times their current market cap. So what we were looking for is something that's cheap, very cheap, undervalued, with a 2 to 3 year timeline, and not like you say, we don't want these pie in the sky type plays where you don't know what's going to happen and you need to wait for many years. And by the way, I created a special report for your listeners about this company because it's time sensitive, obviously, at wealthresearchgroup.com/merger, MERGER. Yeah. So definitely welcome to look at that report thoroughly.
Okay. Let me ask you one final question.
Sure.
On the commodity note, silver, gold, do you see those things heading higher?
I think on a technical sense, gold has broke a 7-year downward trend line, and it's not only that, it's broken above the 1300 line for now the third time in this cycle. I can see gold trading for over 1500, about 1510 throughout the year. I don't know if it's going to end 2018 at 1510, but I do see it breaching the 1510 in 2018. There's a lot of reasons behind this, but the most important thing is you want to keep watching if the Fed keeps raising rates. If they keep raising rates, that signals to the economy that the economy is going to print high GDP, and high GDP means more inflation. More inflation is good for gold. With regards to silver, Silver is not treated as a precious metal anymore. It was treated as a precious metal between 2008 and 2012, 2013. There was, the silver mania was insane. People just loved it. If you said anything online about silver, if you said anything online about silver in a negative sense, you were bombarded. Silver is now between 2013 and 2017, the demand for it was very subdued, but now it's starting to come back. So investor demand, out of panic, is starting to come back more in Asia than in the U.S. And so we'll have to see what happens. But obviously, if silver is treated as a precious metal and not an industrial metal again, you saw that it can trade for 3 or 4 times the production cost, which is about $13-14 an ounce. So you saw it already go to about 49 because of that demand. So
good deal. Give the people out one more time your website.
Sure. Wealthresearchgroup.com, and it's a free financial newsletter that we launched about 2 years ago. I was managing a fund for a close-knit group of high net worth people, and we did very well between 2013 and 2015. And I decided that I wanted to shift my focus into education to more people, to get out there and have a situation where there's no threshold for our research. So I do this as a labor of love, and we do this to help strengthen the financial fortress of people that are approaching retirement, that are looking for the most prolific and speculative opportunities on one hand, but are looking for financial stability on the other. And Joe, retirement is changing. Kentucky just announced that if you want to apply for Medicaid, you need to keep working. They need to see a stamp that's like a paycheck. So retirement is going to change. America is going to probably postpone the age of retirement to 69, 71, 73. It's not going to be a fun ride in the next 20 years where 40% of jobs in North America are going to get either automated, robotized, or moved into artificial intelligence. There's so much disruption and so much innovation, and we can remember the same thing happening in Europe not too long ago, like 2 centuries ago, and they had to colonialize the entire world because they couldn't find work in their home base because everything got mechanized, etc. So you are going to see major changes in the world, and you just need to stay really engaged. Most people have a full-time job and a packed life. So Wealth Research Group is just a way to get updated and engaged on the most important things in the economy, the way I see them. And if we find specific opportunities that are high priority, we do publish them.
Yep, and I'll just let everybody know, I've had Lior on probably maybe 4 or 5 times now. I have never, ever, even one time, received an email or contact that said, hey, Joe, that guy, his website, the newsletter, I've never had that. I've only had people tell me, I've signed up, it's good stuff, man. So that's why I bring the guy back on. If I find out that something's just, it's not working out, I'm going to find a way to deny, hey, I'm too busy, I can't see you, I don't know if I could tell you to your face, hey, your stuff's not good. But it's good to know that your stuff is really good. So everybody, again, it's Lior Gantz. Tell them your website one last time.
WealthResearchGroup.com.
All right, it was a pleasure having you on. We'll do it again.
Thank you, Joe.
Take care, buddy.